personally think that the IT industry has been doing reasonably well.
Only 5 to 8% of the total money going to startups is from India. Indian capital is not coming in.
10 to 12% price increase looks likely for the Bangalore market?
I don't see that prices can come down. Volumes may come down maybe due to the economic reasons.
Namaskara. It's known as the IT capital of the country, but Bengaluru is also better known as the startup hub across sectors. This week, CNBC TV18 travels inside Bengaluru to understand and report on the thriving corporate and business culture in this city. We'll get you all of that in just a bit on this show, but for now, it's back to you in the studio.
All right, thanks very much, Kritika. We will come back to you in Bengaluru, but first, here's a look at the headlines this Monday evening, and there's plenty of them. Major GST breakthrough ahead of the Parliament session tomorrow. The select panel adopts the final report after the centre agrees to compensate states for 5 years. The Congress is isolated on its demand to drop the 1% manufacturing tax.
GST aside, the government braces for a stormy monsoon session of Parliament. The centre calls for an all-party meet, says it's ready to discuss all issues, including Lalit Modi and the Vyapam scam. But the Congress insists on nothing short of resignations.
Gold prices slide for the 6th straight day to hit the lowest level in 5 years. Strong dollar takes the sheen off the yellow metal.
Sun Pharma raises the red flag, says revenues and profits could be adversely impacted this fiscal due to costs arising out of the Ranbaxy takeover.
The government challenges the Delhi High Court order granting interim relief to Jindal Steel and Power, says the centre is entitled to fix end use for coal mines up for auctions.
We actually practice financial repression very seriously. We were doing it on the liability side, but we do that on the asset side with our priority sector lending and the statutory liquidity ratio.
The government must rethink on the statutory liquidity ratio and priority sector lending norms, says the Chief Economic Advisor Arvind Subramanian. This on a day when plans to take Parliament's nod to infuse 12,000 crore rupees is what we understand.
Greece takes baby steps towards normalcy. Banks open after a 3-month hiatus, but the capital controls are still in place. European markets opened the week on a positive note.
I don't think the IT industry is losing the race.
Indian IT companies are standing up to the global giants, as Infosys founder N.R. Narayanamurthy calls on the government to adopt international standards when handing out Digital India contracts. All of that and more coming up for you in just a bit. But let's go straight to one of the big stories that we're tracking this evening, and that's the rout that we've seen in international gold prices, which are now sliding for the 6th straight day, hitting the lowest level that we've seen in the last 5 years. Prices in India also falling below the 25,000 mark for the first time in nearly 2 years, but then they have recovered a tad to move above that level. Lata joins us now to take us through what is leading to this slump in prices. Lata, what's going on with gold?
This is the lowest level since March 25th and actually started on a freak note. Normally gold prices fall when dollar rises. Dollar overnight had gone to 97.93, the dollar index that is, but it wasn't as if there was any fresh movement early morning. This appears to have been an unexpected 5-ton trade sell order that came in the Shanghai exchange. There was very low liquidity. Many markets were closed today in East Asia, and this caused a sudden 4% drop in gold prices. This trade could have been on the back of data released on Friday when China, after 5 years of not revealing its gold reserves, revealed that its reserves were 1,650 odd tons, which is a 60% rise over the levels which was last declared in 2009. Now, that was seen by a lot of people in the market as much lower than what the market expected. So it could have been that, but this sudden trade was what led to the fall, and then it became a ripple effect. But the sale itself was coming in an already weakened sentiment on gold, the rise in or expected hike in the federal rates, US Fed Reserve rates, was always going to beat gold down because that pushes up the dollar, and a strong dollar always wins low gold. But more important than that, there is no riskiness, geopolitical or currency in the world, which gives gold its elan as a safe haven. People go to gold only when you perceive risk, and actually risk has been at a very low ebb. There is a lot of appetite for risk. Risk aversion is at a low ebb. We're seeing equities getting celebrated because of the amount of liquidity in the system. So the lack of crisis has become the big enemy for gold, other than, of course, the dollar strength itself. So this just added on to the Chinese trade, just added on to an already falling gold price. Even at the height of the Greek crisis, you did not see gold prices rise, which means the safe haven was simply not evoked. And of course, for India, the other reasons are gold is clearly losing its shine as an investment destination. For the last when the June trade data came, we saw that the amount of gold imported had fallen to $1.97 billion, which was lower than the May level, lower than the March level. So it's been a 3-4 month fall in gold imports. Two big economies, China and India, which normally buy gold, are losing its taste for gold, which explains why it is falling both in India and globally.
Gold has been range-bound for quite a long time, for the last 3-4 months, and it needed some kind of a trigger to move out of that range. I think today Chinese numbers, as well as Lata mentioned, there was a free trade in Chinese market. So I think both have caused this jitteriness again turn into kind of a sudden fall. And the direction was more or less clear on the market that there's no way that market couldn't go up. So on the downside, it needed a trigger that it was provided today. But I don't think anytime soon it will be bottoming out. It is too soon to say that should we be looking at bottoms right now.
And gold prices, like Lata was pointing out, have rebounded, settling back about 25,000 rupees an ounce in India. But on the commodity markets and the equity markets, let's tell you what happened on the Lal Street. Turned out to be a day of consolidation. Markets remained stuck in a narrow band. The Nifty, that slipped below 8,600 in intraday trade, then managed to defend that in the last 60 minutes. The Sensex lost about 40 points in trade, but is sitting comfortably about 28,000. Mid-caps outperformed the blue chips once again, with that index ending with marginal gains. And the big story of the day coming into the national capital, a major breakthrough for the government with the GST Select Panel adopting the final report on GST. Shireen, you've been tracking this story for the last couple of days. We knew it was going to be a cliffhanger, and it all came down to the last day before Parliament reconvenes.
Absolutely, but the good news is that the Select Panel has actually adopted that report. Now it remains to be seen what happens in Parliament. But here's the headline as far as the Select Panel is concerned. There has been unanimity that the government should amend Section 19, which basically means that the Select Panel wants the government to commit to compensating state governments for a period of 5 years and nothing less than that. Our sources tell us that the government is likely to agree to that demand, so that will be an amendment that the government is likely to move as and when this bill is taken up in the Rajya Sabha. As far as the Congress's demands are concerned, and by the way, there's good economic rationale for the Congress's demands, which include doing away with the 1% manufacturing tax, which also includes subsuming petroleum, alcohol, electricity into the GST. But there, the GST panel has left the Congress isolated, and as we've been reporting here, the panel believes that this is the best they can do in the current situation in order to push the GST bill through. So those amendments are unlikely at this point in time. What is important to note now is that last-minute negotiations are currently underway with the Congress party to try and get the Congress party on board. Regional parties, whether it's the TMC, it's the JDU, it's the NCP, it's the Samajwadi Party, most parties are on board for the GST bill. So now it remains to be seen whether the government will table this in the Rajya Sabha and whether it meets the date with the monsoon session of Parliament. Well, we've been speaking with a whole host of people. I spoke with Rajiv Chandrasekhar. He is a member of the GST panel that submitted and adopted the report today, and he admitted that the 1% manufacturing tax is a compromise, but that it's a necessary one to ensure that the bill goes through in this session itself.
It is clearly understood that there are parties like the Congress that are taking a slightly more purist approach to the GST on the 1% interstate tax. But you must understand the GST has come about as part of a consensus between the state governments and the union government. And many state governments have asked for this 1% tax because of a fear of loss of revenue and loss of competitiveness in manufacturing. So this origin-based tax is a compromise, is a departure from the purest definition of GST, is cascading. There is no doubt about that. But in a lot of ways, the GST is a compromise of the states and the center, and a national tax is less than perfect, but it is the best we can do under the circumstances.
That's right. One of the big areas where a breakthrough has been achieved, I understand, Rajiv, is on the issue of a committed compensation to state governments for a period of 5 years. This is, of course, Section 19 as part of the GST Constitutional Amendment Bill. I know you cannot talk specifics, but would it be fair to assume that consensus has been arrived at within the panel as far as amending Section 19, which basically ensures a committed compensation for 5 years to state governments?
Yeah, I think it's a fair and legitimate concern on the parts of all states because they're entering into new uncharted territories, that they do not know what the consequent effect of GST would be on their revenues. And so therefore, to ask the union government to backstop them for at least 5 years on any loss of revenues. And I think that was a legitimate demand all along. And since the Rajya Sabha, in a lot of ways, represents state interests and is a council of states, I think that is something that there was widespread consensus in the parliament before even the select committee was formed. So I think that is what will be, in my opinion, part of the bill.
Well, that's Rajiv Chandrasekhar, a member of the GST panel, suggesting that Section 19 is likely to be amended because that is what most state governments want. They want the central government to ensure 5-year compensation. Now, the Congress remains steadfast in its opposition. Senior leader Anand Sharma, the former Commerce Minister, called the government's attempt at pushing the GST bill through half-baked. But Amit Mitra of the Trinamool Congress, he's the Finance Minister of West Bengal, a crucial player in the Rajya Sabha, said his party will back the GST bill.
The government has to listen to the opposition. It's a constitutional amendment. And without us, they will not be able to do it. We are for GST, but it has to be correct. It cannot be half-baked. You cannot leave out 4 important items and as a result, make it a joke of a GST. You know, we want to bring down the transaction costs. We want to really create a market in which both the entrepreneur and the consumer benefit. These are fundamental issues for us. When states are being compensated for all revenue losses, then why petroleum is out?
We are being told that the government is only likely to accept one amendment, which is Section 19, which is to commit to compensating states for 5 years.
No.
If that is the only amendment, sir, will you support the bill?
Well, you cannot have it clause by clause. Do you know how legislation is adopted? It doesn't mean that
I think as of now, the information that we have is that that is the only amendment that they're likely to move.
That's fine. So I have given you my answer. When the bill comes before the House, we have issues and we reserve the right to move amendments.
For the benefit of the viewers who are watching, Mr. Sharma, what should they? Should they have hope of the GST bill going through in this session or not, sir?
Let's see, there are other issues which are the priority matters before the country. First, those issues will be taken up. And as and when this bill comes, we have our viewpoint. We have informed the government. The government is conscious. I hope they become sensitive to it and have a bill which actually is beneficial for the country's economy and gives to India a great common market.
What would you be satisfied with, sir? A statement from the Prime Minister on Lalit Gate and Vyapam?
No, accountability, action. They cannot rewrite the rule book, one set of rules for very minor allegations of impropriety when they were UPA ministers and a different rule book for themselves. We will not allow that.
We are confident that for 5 years, compensation to the states is something that this government will consider, because that's a crucial requirement for the GST to be successful. So we've supported the GST in principle in our manifesto. We support the GST in practice, provided no state loses its current revenue as a result of introduction of GST.
That's what the Congress and the TMC have to say as far as that GST bill goes. Incidentally, the chief economic advisor, who's heading a panel which will recommend the revenue neutral rate, a few hours back said the goods and services tax should roll out on the 1st of April, and this committee will be making its recommendations in about 4 to 6 weeks. The GST bill is just one of the many big-ticket legislations that the government plans to pass within the monsoon session of Parliament. And with so many allegations and scams doing the rounds right now, it's bound to be a stormy one. The government, on its behalf, did try to gauge the mood, but holding an all-party meet today. That's, of course, on the eve of the monsoon session of Parliament. And while senior cabinet ministers maintain they are willing to discuss every issue on the floor of the House, the Congress remains firm on its demand for resignations.
जो लोग ललित गेट में इन्वॉल्व हैं और जो व्यापन में इन्वॉल्व है उन पर कार्रवाई करनी चाहिए।
हम पूरे देश के हर एक नागरिक का सबका साथ लेके सबका विकास कर पाए। अगर कोई उसमें बाधाएं डालता है तो उसका जवाब उन्हीं को देना पड़ेगा।
Modi ji's silence is a deafening silence. He says that he wants India to be corruption-free. We say at least make your cabinet corruption-free.
One of the key issues is whether you need a purist version of a GST or the kind of changes that have been made.
We cannot allow the Congress party to practice this kind of blackmail politics.
We have said it in the beginning itself. When the land acquisition bill was introduced, we said about the consent, and we still stress on it that the consent of the farmer is a must while acquiring his land.
Serious allegations have come against different chief ministers of different parties. If the opposition and other parties want to raise them and the Speaker admits them, we are ready to discuss all the issues concerning the nation.
So, Parliament reconvenes tomorrow. It's going to be my scam versus your scam, so expect fireworks there. The big corporate story now. Sun Pharma has issued a profit warning for the fiscal. The company expects revenues to remain flat as the Ranbaxy integration is expected to increase its costs. Archana is standing by with the details. Archana, what are the implications of the warning from Sun Pharma?
Well, let me start by saying that it's a first for Sun Pharma on two counts. One, that this is the first time it's come out with a mid-quarter update, and two, it's the first time it has issued a profit warning. Now, the company says that FY16 revenues will be flat with a slightly negative bias compared to the last fiscal. It has also said that consolidated profits will come under pressure due to integration and remediation charges. However, the management said it has not found any major surprises, especially unpleasant ones, from Ranbaxy till now. On a con call with analysts, Sun said that most of these integration charges will not be recurring ones, so the impact on the balance sheet beyond FY16 will be controlled. Revenue guidance has also factored in the visible and current product pipeline that includes bigger product monetizations like that of Glivec. Supply disruptions, however, from its Halol facility are also expected to continue for some more time, but the company did not give any timeline for resolution of its issues with the US FDA as far as Halol is concerned. It said it is focusing on building a backup supply for critical products. So far, the products that have been impacted are from the 4 injectable units at Halol, and the main pressure points are that of pricing in the market, losing market share on some products, and supply disruption on some other. Management highlighted that the consent decree for Ranbaxy's plants is currently progressing, and the focus that Sun Pharma now has is to get at least one of these sites approved from the US FDA. But net-net, regulatory troubles are not behind the company just yet. On the synergies front, it was a positive surprise that the company has revised its Ranbaxy synergy guidance upwards by 15 to 20%, which means they now expect about $280 to $300 million in synergies by fiscal 2018. The company explained that some of these synergies could be one-time, like that of tax shelters. Others could be more consistent ones. Another piece from the integration was divestment of non-core, low-margin businesses, which the company will go ahead. It says that it has already highlighted 2 or 3 businesses to divest, those that will not be relevant from the long-term perspective. It may also look at selling some products or APIs. And from the future growth perspective, company has strengthened its ophthalmology and OTC teams in US, continues its global expansions, will see increased spends on R&D as regards the psoriasis molecule, and and the focus is to build the high-margin consumer business into a global business. So while the growth trajectory they have outlined, but the impact on FY16 is something that the markets will definitely be spooked because of.
Thanks, Rachana, for joining us with that analysis. Let's now hear it from the man himself, Dilip Shanghvi. He held a conference call trying to allay fears of investors over the profit warning, saying it's always better to raise the red flag beforehand than to justify bad results later on.
Remedial steps at Mohali, Devas, Ponta Sahib and Tonsa facilities are also continuing. We are working towards the fulfillment of the requirements of the US consent decree and will try to expedite the resolution for at least one of these facilities. As a part of the Ranbaxy integration process, we expect to incur certain integration charges in order to generate long-term synergies from this merger. We may decide to discontinue certain non-strategic businesses.
Well, that Dilip Shanghvi in Sun Pharma is certainly going to be a stock to watch out for, as will Infosys, because the IT bellwether will announce its quarterly results tomorrow. And what does the street expect? Rima joins us now with her analysis. Rima, what is the street going in with Infosys likely to deliver?
Yes, expectations are for steady quarter from Infosys. So we're working with a dollar revenue growth of 3% on a quarter-on-quarter basis, just mildly lower than the 3.5% that TCS delivered. Margins have seen lower by 160 basis points QOQ at 24.1%, impacted by wage and visa hike. The key to watch for will be the management commentary and demand environment, as well as on the FY16 guidance. The company has guided for an FY16 constant currency growth of 10 to 12%, and that in all likelihood is expected to be maintained because the deal momentum seems to have improved. The pipeline is looking strong. The win ratios have also improved, going by the management body language. The key to watch for, apart from that, will be how the company is going to meet its full year guidance. Some talk maybe on capital allocation. Remember, the cash balance is at over $5 billion. The company's 5-year outlook, where they have guided for $20 billion in revenues, maybe a line or two on nutrition as well, which is higher than what the industry is at.
Well, idli, coffee and Infosys, these are the three things that have defined Bengaluru over many, many decades now. So what better way to start inside Bengaluru than a chat with N.R. Narayana Murthy, the co-founder of Infosys and one of the stalwarts of the Indian IT industry. Nada Venkatesh caught up with Murthy and asked him about Digital India, about the startup ecosystem, and if at all Indian IT companies were losing out to their global peers.
Internet of Things has to play a major role in helping other sectors of our economy, the manufacturing sector, leverage the power of IT, power of Internet. So therefore, I would expect Internet of Things to be the area that will provide opportunities for our IT companies, not just in India, but throughout the globe. Because that's what will provide the next level of innovation for other sectors of the economy, leveraging the power of Internet.
But are you satisfied? For instance, e-commerce is an obvious offshoot of this foundation, the Internet of Things. Are you satisfied and happy with the way it has grown? Is it looking like the next wealth generator or the next job generator?
No, you see, the reality is simply this. Even in the IT sector, let's remember that there was only one company which distributed wealth to its employees in a big way. It is Infosys. I think at today's prices we distribute about $11 billion. But no other company has done even in the IT sector. So therefore it depends upon the founders of these companies, what their mindset is, how they want to distribute the wealth that they create. It is not limited to IT sector or any sector. It can happen in any sector.
No, but okay, wealth generation perhaps is a more specific way of putting it. It was also a job generator. I mean, it was wealth generator for the nation in that sense, not just the stock investors.
Absolutely.
What is that next idea which may generate that kind of jobs, that kind of economic growth?
Well, if Digital India were to succeed, if it becomes easy to work with the government, if government were to accept the international standards of contracts in software development, in accepting the software that the companies develop, if they pay on time, etc., etc., then I believe Digital India will become a very, very important instrument for creating large number of jobs. Digital India will start opportunities for applications in local languages, in Hindi, in Kannada, in Tamil, Bengali, etc., etc. But the important requirement is the contractual clauses that are insisted on by the government should be in line with contractual clauses insisted on by the foreign corporations, simply because Indian companies derive 90 to 98% of the revenue from these corporations, and the prices are very attractive outside India. So therefore, unless Government of India comes out with reasonably attractive and competitive set of clauses, I am not very sure if the large companies will be keen on working with the government.
Price will be the big thing.
Not just price. Price is one, but payment on time, accepting software on time, not changing requirements midstream, and not allocating enough time to define requirements, and of course, in some cases, not insisting on corruption, etc., etc. If those things are all adhered to, I have no doubt at all that the entire IT industry will rally behind the government in making Digital India a success.
But at the moment, you see margins within India lower than margins outside India.
No, not lower. I don't know if, certainly I know about Infosys. There is not a single project Infosys has done, and I believe the same story, where the company has not lost money.
Well, that was Infosys founder N. Narayanamurthy. But our special coverage from Bangalore will continue. There's a lot more coming up. Also on the show, the government challenges the Delhi High Court order granting interim relief to Jindal Steel and Power.
And Sun TV sues the government over rejection of FM radio bids. All of that and a lot more when we return.